Cathie Wood's Ark Invest fund just sold over 2 million shares of Palantir stock, just 1 month after buying 1.2 million shares at a much higher price. She also has been regularly unloading Tesla shares despite it being her highest conviction name. What is going on, and are there some things we can learn about these curious moves Cathie Wood has been making over the past month? Let's first start with Palantir stock, which is a popular name among the YouTube investing crowd. Notably, Tom Nash, who I find both entertaining and authentic, has been very bullish this name, along with many others here on YouTube. I've personally been skeptical of this name, as the valuation, even factoring in future contracts the company has in the pipeline, for a lack of a better term, the valuation is outrageous. I even posted a video after the company's reported earnings last month saying the stock was overhyped, overvalued, and likely heading lower. This leads us to today, where ironically enough, the stock is sitting on a technical level of support where I'd actually expect people previously bullish on this stock to start pounding the table to be buying more shares. However, Cathie Wood's Ark Invest fund did just the opposite. In an email sent to subscribers, Cathie Wood just sold over 1.7 million shares of Palantir stock in the Ark K fund and over 400,000 shares in the Ark W fund. Palantir shares closed the trading day at around $18.86 per share. What's curious is just a month prior, a day after reporting earnings on November 10th, Cathie Wood's Ark funds bought over 900,000 shares in the Ark K fund and over 220,000 shares in the Ark W fund for a cost likely closer to about $23 per share. Has Cathie Wood turned bearish on Palantir just 1 month after buying shares at a significantly higher price, or is something else going on? Making this situation even more perplexing is the fact that Cathie Wood went on Bloomberg just last week and said, quote, especially in periods where our style is out of favor, what we usually do is consolidate our holdings toward our highest conviction names. So Tesla, Roku, Teladoc, Square, and Shopify. And while Palantir wasn't mentioned, the stock is just outside the top 10 holdings in each of these funds. However, that's not what has me scratching my head. Despite what Cathie Wood is telling investors about piling into her highest conviction names, she's actually doing the opposite when you look at her recent trades. For example, just over the past week, her fund has sold well over 100,000 shares of Tesla stock, her highest conviction name. Why would you go on national TV and tell investors you consolidate in your highest conviction names, but then sell it? It seems really odd. And I already know what the Cathie Wood cheerleaders are going to post in the comments below, since I've posted numerous videos questioning her strategy over the past year. Many are going to claim she had to sell Tesla because it exceeded a 10% weighting in her portfolio. But this is a myth that is 100% totally false. Ark funds do not, and I repeat, do not need to sell a stock that goes over a 10% weighting. In other words, she doesn't need to sell Tesla stock. How do I know? Cathie Wood herself said this in a 2019 quote, while I can't buy a stock that is 10% more of a portfolio, we don't have to sell such a position. We can let it run. The she has to sell because it's over a 10% weight myth is officially busted, and don't even think about posting that down in the comments below. So why is she selling her highest conviction stocks like Tesla, Palantir, and even Shopify? It's because she needs the money. According to Track Insight, outflows in Cathie Wood's flagship ETF, RK, has been steady since March of 2021, which, ironically enough, is when many of these overvalued, overhyped, unprofitable names like Teladoc, Palantir, Roku peaked in valuation. The Ark W fund is not nearly as bad, but outflows are accelerating as both funds have started to underperform. The Ark K ETF is down over 15% year to date and over 12% just over the past month. This is leading investors to head for the hills. I'm sure some of you will clock in below and correctly proclaim Cathie Wood's Ark ETF is up over 476% since inception, which is very impressive. But it's almost a guarantee. Most investors piled into this ETF at a much higher price, especially when you analyze both the inflows and the volume charts of this ETF. The bottom line is Cathie Wood's investments have struggled this year, and now outflows in her funds are forcing her to sell names she previously claimed that she had a, quote, 5-year time horizon on. Do you really need to pay a management fee to a fund advisor that is forced to sell high conviction names to buy other names that have crashed? Seems like a poor investing strategy to me, but only time will tell.